Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Thursday the 18th. Jobs numbers today, as usual. Coming to the charts here. Just kind of nonchalant. Nothing too incredibly interesting. So it's been a really tight week, but it has been a down week, and there was a little bit of hope that, the Chinese coming back from the New Year's holiday would maybe result in some increased activity. But so far, the Asian session was a pretty big disappointment, and we continued to just be a little bit depressed. Meanwhile, over in the treasuries, they pushed pretty hard yesterday, but ultimately after that news, we snapped back up after the PPI was released, and now we're about where we were, and it's kind of suggesting to me at the moment that we might move down. So when we come over into the commodities, oil higher. Oil just continues to look great. Those are just a great example of commodities have a tendency to run, right? Gold, on the other hand, pretty bad day the day before. Yesterday, not so great either, although silver continues to hold its support. Copper going well as the China market opened back up. Copper again, just doing amazing. Will they get to $4? It sure looks like it. But it was really the dollar that's kind of been hampering gold and silver. It appears that the dollar may be turning back around, so we may get some support to some of those metals. Anyways, we're gonna come over here. And we're going to look at the news. So Fed's Bernard has already been speaking. But down at the bottom of the hour, we get, not only do we get our data, our jobless claims data, we also get building permits, housing starts, and Philadelphia Fed Manufacturing Index. So we're about to get a ton of data here. Okay, now over on the Treasury front, just looking at it right now, they fell through 24, and now on the way back, there's a pretty massive iceberg on the offer. All right, so let's turn on text-to-speech, shall we? Good morning, Mark. Oh, am I already running it? Hold the boat. I guess I never shut it down the other day. Unable to retrieve live chat ID? Really? Try that again. Well, that might just be a fluke. Let's hold on here. Oh yeah, by the way, I made a little edit to our picture. Let's fix that. Yeah. Maybe what happened was I left it on and so it's rejecting me for today because I've already over the requests. Okay, well, let's see here. What can we do for this then? Okay, we'll do it like that for now. Does it work? Does not work. Oh, it works. Okay, cool. We're good. We're good. Okay. Well, it was a lot of a flurry of activity there, but now it's kind of since died down, and I guess they're just going to wait for the news. I think I'm going to move this to a new window. So that I can keep an eye on it over here. Okay. Let's see here. Walmart tumbles on poor guidance, greater spending plans despite new $20 billion buyback. Oy. Very interesting. Interesting indeed. What? Federal judge weighs what she called a one of first of its kind lawsuit that would hold an employer responsible for a worker's spouse getting sick with COVID-19. Okay. Yeah, this is why the Republicans wanted protections. Business protections. Oh, that's not what I wanted. There we go. Okay, so somebody is on Twitter is posting Philly Fed early here, saying that it was 23.1 instead of versus an expected 20. That's a little bit early, but that's good. I'm just, you know what? I'm just gonna. Okay, so initial jobless claims coming in at 861 versus 773 expected. So higher than expected. Housing starts 1580 versus 1660. Yeah, the initial claims is a pretty big miss, though. Continued claims a little bit higher than expected as well. So the housing numbers came out good. Building permits 1.881 million versus 1.678 million. And the starts 1.58 versus 1.65. So there was more building permits than expected, but there wasn't as many housing starts as expected. Now we're going to give you the Philly Fed, and then, yeah, the jobless claims. 861 versus 765. Now the 4-week claim average is about what you would expect. Well, the market so far, not reacting. Good morning, everybody. Good morning, Vlad. Oops. So I'm just going to exit the positions and chill. They probably expect Biden to keep extending unemployment benefits. Well, so like when you look at Zero Hedge, like just the terrible news we needed for new all-time highs. I tell you what, a lot of people all of a sudden are bearish. It's kind of funny how we have like a few days in the market where we don't just take off, and all of a sudden everybody on YouTube and the business media and all of these people are like, oh, it's this market is crazy and we should be going down and I'm bearish and all of this stuff. And clearly Zero Hedge also thinks that we need to have some sort of a pullback. But then I'm looking at it and I'm like, okay, well, jobless claims was higher than expected. First of all, jobless claims is not what I would consider a high impact report. It's a moderate impact report. Second of all, it was a miss by about how do we measure this? About 70,000 more claims. So does 70,000 more claims drastically change your opinion of the economy? Well, it certainly doesn't help, but it's not something that like, oh, that's so bad, sell, sell, sell. You know what I mean? So maybe this is something that kind of, well, so there was a little bit of a above push. I will try and, so this might be something that kind of like slowly drifts down and then turns into more. You know what I mean? Here's the latest on Facebook's move to block news in Australia. What? Okay. Oh, they all oppose this law in Australia where they have to like pay money or something. I don't get that one. The law sounds silly. But Australia insists. Okay, so they didn't come get me. Yo, that's legit. Try and post a link to an Australian news site and Facebook won't let you? Really? Huh. Well, a music artist gets paid to play, but write a good story and you get nothing. But isn't the whole thing that you put it on Facebook and then they click the link and they go to your website and you make money off of the advertising? They want YouTube to pay to even have your link? That's what they're saying, right? That doesn't make sense to me. Okay, so they're heading for the low of the day. Or rather, extended session low. And the treasuries are pushing up too. So the main thing that clued me in there, I mean, I was able to get out of the E-mini before it turned, was that the treasuries had gone up 2 ticks, and especially given the action that was going on before. Now I'm kind of thinking that people were trying to position long into that news, and I have to bail. Okay, so there they touched the low, but they didn't fall through it yet. Probably needs another moment here. Yep. Okay. So there's oh, is that still not the okay. Okay, that's still not it. That's still not it. Let's reset so that I can. Link taxes aren't about revenue. They're about controlling the flow of information. Less sharing on social media means less reactions to headlines. Oh. Oh. Okay, so there they did go lower. That's why it's useful to reset the DOM. Good. So there was a spot right there that I think my robot would have normally have taken that I wouldn't want it to take. And I added filters based on level 2. Whoa, wait, what? Somebody just stacked a huge old honker there on 3900 when we went through it. Okay. So I'm out. So they went through him. Brandon tried going long off of that. Now that one does not make sense. We should ban Google in Florida. Are you in Florida? A link tax seems like it would be really burdensome. I don't know if it's so much about controlling the flow of news. The whole thing just I don't know what they're trying to do, but the whole thing is just contrary to the way that the internet works, you know? Well, you say it's about controlling the flow of information, but it seems like that the result is that you don't get Facebook or you can't link Facebook in Australia. Like, I don't. It's weird. It's just weird, man. It's just strange. And it's not something that I would expect to hear from Australia. Like, they tend to be slightly liberal over there. And, well, they have been. There's definitely a liberal contingent there, but the government lately has been conservative, hasn't it? I don't know, man. Because people just won't link, they'll just say stuff. They'll just post the picture and then you go and search for it yourself or something. It's so weird. Did you see them eat that 1,000? Like, yeah. I put my stop just above it because I was like, why would you put a 1,000 lot there like that? And of course, they busted right through it and turned around. So that was a good way to play it for me. Happy with what I got. Now, treasuries, on the other hand, coming back to where they were. Robin Brooks, I keep reading how Fed average inflation targeting will prevent a bond market tantrum. No, AIT has the same problem as previous versions of forward guidance. It targets front-end rates, not back-end rates. It's the latter that are spiking, and AIT does nothing to anchor them. This is a good observation. But is there really anything that you can do to target the longer end rates other than yield curve control? Well, I kind of wonder with that 3,900 if he really wanted it or not. I mean, it's really unusual in the S&P 500 to stack such a large order immediately after it goes through a big price, you know? It's just slightly unusual. I don't know what the deal is, but I have to like turn my head more to be able to read YouTube with the way that I've got it set up here. By the way, I should go and roll over some my oil. Dollar pointing down. I'm not seeing gold and silver really moving yet, but let's see if they... The dollar reaction to news lately, by the way, has been really interesting, hasn't it? Because generally speaking, you expect the dollar to rise when there's concern in the market, so when it's risk off. And what we just had is a risk off move. But in this particular case, the continuing jobless claims suggests that the US economy is not as strong as they would like, or it's not reacting, it's not recovering to the virus as well as they would like. And so that causes the dollar to drop instead. And that's happened a number of times with bad news lately. Okay, so that was an aggressive move. And look, he added more there at 39.50. Oh, well, I'm not going to bet on him. Yeah, see, that comes back up. Shenanigans. Like, here's the thing. When you're getting shenanigans like that, I have not been able to find a probable setup where you really know what it's going to do off of those. He could have eaten it and held it and pushed it down again and made it push further, and that could still happen. Or it could just be like a spoof or something. Although he did eat it, didn't he? Today, Melvin and other hedge funds might move the market on manipulation GameStop move. I don't know how market moving that's gonna be, to be honest with you. It's one of those things like... well, like a really good example would be like when Facebook and Twitter were testifying, right? It would have a short-term sentiment impact on them, but ultimately didn't matter, But here, there's not. Melvin isn't a stock, so do they come out and they say, "Oh, Melvin's not doing well. We should sell all of the stocks that Melvin holds"? I don't. That one doesn't quite line up for me. Well, the treasuries are like sitting down there, man. Oh, that's not what I wanted. The first ETF tracking Bitcoin in North America begins trading in the Toronto. Oh, so the Canadians allowed one, huh? Oh, how did I miss that one? What is this? Red Box Global. Real-time news, caller data, economic data, exclusive news Twitter feed, audio news. $50 a month. Interesting. Of course, kind of backs up there. Okay, so E-mini still kind of chilling in that area that we had the big orders. So that means that we have now created a hole. There it is. That could be a problem. Okay, E-mini may be going to try pressing the other side of this, though. So they're up there, but it's like it's pretty chill. So like because of that, I can't really gauge what the liquidity looks like at that area. Renter Nation returns multifamily starts permits soared in January? Really? Surge in permits was driven by multifamily rental permits, while single-family permits rose 3.8%. Okay, so there is maybe a little bit of liquidity there still, and not a whole lot of market buyers. So what we could do if we really think that it's going to go through is we could put our order somewhere up in here. By the way, curve is steepening a little bit. Okay. Brandon's trying to go short again. That one's kind of weird. It's not the way that setup tends to work, but my other robot hasn't taken any. There's one spot where he might have done it, but it would have been good, but the book was not what I wanted it to be there in that location, so. So you can see them reacting to it. The liquidity is still there, but there's a little bit more market buying pressure this time. And the treasuries are kind of pointing down again, especially the 30-year. Dixie was all over in Globex. Well, I mean, it was right up there at 91. It kind of was a given that it was going to pull back at some point. But so far, it's just a pullback, right? And it's really curious to me that the move since the news, I guess it hasn't been too dramatic, but the move since the news has been down. No, I think that they're saying the U.S. economy isn't as strong. So one thing I kind of keep forgetting, but we should probably factor in more, and it's really hard for us to do this because we don't really get a whole lot of information in that direction. But the impact of China. And a lot of the rise that we've seen globally has been because of the money that China is throwing around, because they've been easing like a ton, crazy amounts, right? And that's, I think, part of why you get these huge gaps in the overnight session is that it's China that buys it up, whereas in the U.S. session they just kind of tend to keep things range bound, right? So you've got these investors in China and they're like, where do we want to put our money? And then they look at the jobless claims and they see unemployment not still struggling in the United States. And they say, oh, well, maybe I don't want my money in the United States. And they pull it out and they put it back in China, or I don't know if you put it in Europe at this point or what. The euro is moving up, though. Facebook to debunk climate change myths. Oh, cool. So are you going to debunk that myth that we're all going to die in 20 years? Because I keep hearing people say that the science says we're all going to die, and that's not true. And that is the most common piece of climate change misinformation that I see. I'm not saying that I don't think climate change is real. I'm not saying that I don't think it's a big deal. I'm just saying that people say that we're all going to be underwater or dead in 10 to 20 years, and that is false. The science does not support that, rather. Now do they think that there's going to be another sell at the equities? The only misinformation is information that gives you hope, I bet. Okay. So they took that really aggressively. Do you see that? Only 338 to push down at 24 in the 10-year? I wonder why the market maker was so reluctant to hold that. Given that it's been pretty slashy here, you know? Is slashy the right word? It must be because of the flow that he's seeing in the 30. Yeah, okay. The highest and last peak we'll ever see in COVID cases was 2 days after Congress approved Biden. After he was sworn in, the World Health Organization tightened up the definition of a case. Well, it was always a given that we were going to peak here after Christmas, right? Sometime in January, regardless of what the definition was. That was the thing that I think is so funny. I tell you what, at the beginning of the pandemic, everybody was so interested in the numbers. Do you remember that? Did you experience the same thing? Like, my mom would tell me how many new cases we had in Utah, for instance, right? So when the number of cases wasn't really all that significant, and we weren't really having like a crazy thing until, you know, at least outside of New York, right? So very, very early on last spring, everybody was paying attention to the numbers. And then when we get to the point where all of the data scientists are saying that we're peaking, nobody's paying attention to the numbers or the trajectory of them. They're just talking about how bad it is. And so it keeps turning out that the peak of the political excitement, if you want to call it that, over coronavirus ends up being at the point at which it like almost doesn't even matter anymore, because the number of cases are going to go down on their own. Did someone say, "Mom, good morning, Win"? Yeah, I was talking about my mom. Smart money against popular opinion. Well, and that's the other thing is that so it was interesting to watch all of the analysts become pandemic experts, because I mean, it's data science, it's a related field, so I think that it's cool that it worked that way, right? But then here again, when we were to the point when things were turning around, I did see some analysts saying, you know, okay, like we're going to peak, but I didn't see the smart money doing stuff there. But I guess that's because the smart money, ever since the first stimulus was released, the smart money has been playing the amount of liquidity that's being put into the market, and they haven't really cared about the coronavirus cases, right? That was only a thing for like the very beginning of that bull run for like, you know, a few weeks, and then we pushed through that, and people started to accept that we were in a recovery, and coronavirus cases stopped mattering to the market. Another reason to turn off news during extreme days? Well, I'm noticing more and more one of the biggest biases that we get is it just has to do with attention. At least in this market. Attention biases have a very outsized impact on markets, and this market in particular. If Robinhood puts a stock on their top stock tickers and people open up the app and that's what they're playing. And they've done studies on this, right? And I think investing as a whole, like, I don't know if this is intentional or what, but like when I look at my channel, there was a noticeably increased amount of my channel being recommended by the algorithm about late 2019. It was starting to pick up going into the pandemic. That's one of the things that I also find interesting is everybody talks about, well, we had the stimulus, and because of the stimulus, that's why everybody's investing in everything. But no, I started to see stuff on social media and I started to notice the algorithms were treating it different before that, going into it. And then the pandemic happened and then they all got money and then it really picked up. So it was almost like the algorithms just all of a sudden, and I'm not going to say it's like some conspiracy, like all of a sudden the powers that be decided, oh, now we want the public interested in the market. So no, I don't think it was that. I think it was just like that was a point at which millennials got old enough to that point in their lives where their savings started to matter to them. And the algorithm picked it up and all of a sudden it wasn't a thing before and all of a sudden it was. In fact, I think I can show you this. The problem is that like my channel is just like one channel. So it's really more anecdotal evidence, right? Reach, impressions, lifetime. Okay. Yeah. So do you see? So over here, there was some periods where I had, good videos or whatever it was, and people picked up on it, right? But then all of a sudden, late into that year, like December time period, it started getting, the impressions started increasing. The impressions started increasing. And then through the pandemic, the amount of interest kind of stayed there until we got to this year. And then we started getting these spikes. I'm trying to remember, what was this one right here? Oh, that was like the election and stuff, wasn't it? Yeah. For the election. Last 90 days. No, I need more than 90. Last year. Yeah, it's not going to tell me. I don't know what it was that I released in October. It was a video. Yeah, the earthquake video is that one, I think. That big spike at the beginning of 2018. Was it 2018? I think so. But do you see what I'm talking about? It was like, oh no, wait, this is not far back enough. Because right here is 2020, right? It was like, it was picking up before the pandemic really became a thing. And I think that the algorithms, something changed. That people were more interested in it. And the algorithm just picked up that little change, like all these people becoming 30. And then it started to realize, oh, we can like really hook people on investing. And so now all of a sudden, all of the algorithms are pushing investing to millennials. And that's why you're getting what you do. That's what I think. Well, I'm surprised. Are any of mine? No. Well, Brandon took one, but Brandon took that short, and it is working out pretty okay for him, I would say. But Jay not taking it. And now I'm kind of thinking, was I too strict? Well, that last one, you couldn't be more strict than that, so. Now, interestingly enough, that both the treasuries and the E-mini are moving down. There's a big order at 19. It was a, why is that one? Okay. So 19 was a pivot from the other day, but yesterday's low was 15. Do we see anything at 15? We don't. Morning, Ace. Seth, I got late. What was your thinking process for going short in ZN again? So it was largely me thinking treasuries are going to continue to sell off and just reading the liquidity. Actually, I'm kind of thinking about it, and I'm kind of going like, why was I that anxious to get short? Because I didn't just get short. I decided to screw around and market make with it and pick a few contracts as it was coming back up. Well, now when I was doing that, we had those big orders in the E-mini, and so I was thinking that the E-mini might try and run up on us. Purely order. Well, I mean, it's not just so there's news involved in there, right? So like I know what the economic backdrop is, and I know what the issues that the market are looking at the most, and what has been the narrative this past week. Rates are increasing and the equity markets have been struggling with it, right? So I come in here and I'm looking at that news. Okay, didn't really affect them. Kind of looks to me like they're going to push them. They're going to push again. And then I was just kind of market making it. Well, okay. So you know what? If you want to look for like what was the useful thing, really, the useful thing was this. I was already in a position at this point, right? And they came and they traded, what price was it? Was it 24.5? I think 25. Yeah, it was 25 here. So they were trading thousands of contracts here. And then finally they filled me at 25 and there was only 500 contracts traded. Okay. So that was the warning sign to me, was like all of a sudden, oh, the market maker doesn't really want to hold longs here for some reason. So when earlier I was like, I was just kind of trying to play the range and everything. But when I saw that, then I was like, okay, hands off. Because I knew that there was something off. And you can see it's happened quite a few times. Now, I'm sure that prices did trade around in those areas before. But right now you can see there wasn't any volume traded on the way back up. And there was a couple of prices where they hardly traded anything at all. Yeah, CPI was bad, but they kind of well, no. So I believe so. Yeah, it's interesting. I don't know. You get into these sorts of things where it's like, okay, I can tell you that I can trade news and I can tell you how I analyze news, but there's like, in this situation it meant this, in this situation it meant this, and I'm not 100% sure why I knew that. And sometimes I will just take trades that it's kind of like, I don't know if I really had a good reason for it, and it ends up working really, really well. Although there's certainly plenty of those that don't work out well too, right? But yesterday, we saw the PPI print. As soon as the PPI print came out, I hit into it and sold it. It went down, and I watched that flow coming out, selling. And then there was a lot of absorption every step of the way. And then I saw one price where they were trying to get through it. They got through it. It ticked back up again, and then they weren't able to continue pushing it. And so I got out at that point. And then it completely retraced, and it ended up moving higher, right? So when I looked at that, I thought, well, they sold it off so much yesterday. Why were they selling it off so much on Tuesday? Well, I think that the best theory, it's just a theory because we can't really know for sure, but I think the best theory was that they were selling off yesterday because they knew the PPI was going to be bad. And that's why when the PPI news came out, they won. They got their trade, and so they take their profits when everybody sells into them, right? And then there was an auction on top of that, right? So when I look at yesterday's move, you might be tempted to think, oh, well, the PPI came out, but like they reversed off of it. So that means that they didn't actually care about the PPI news. But that's not the way that I read it, right? I read it as they front ran that trade. And now that trade is over and they got the auction through with, I think that the pressure continues to be down. Unless the E-mini like really falls apart. Or like the Fed says something, or I don't know. Because what at this point is gonna is gonna support treasuries. Unless you're expecting a recession. Japanese invented candlesticks for price trading and is the origin of data analytics. They did care, but it only served them to buy lower. Yeah, well, because they were already in a trade, right? This is why when a lot of people say you can't trade off of news. Well, one of the reasons why I think a lot of retail traders have trouble trading off of news is because they aren't really able to analyze how the market is positioned and how that plays into how they play off the news. So when you get a big move like yesterday or like Tuesday, where the market aggressively pushed short, that's positioning. And then they ended up being right. Well, you're going to get the move down, of course, because of what it's the news. But those guys that were front running that, they're going to try and take profits. The best move news is the ones that create the real trends are the ones where like the market is positioned the wrong way and you get a really big beat going the other way and they all have to reposition, right? And then you end up with somebody that's like in a big position that's wrong. And then those are the ones that just like keep going and going, right? No, that's interesting. They failed to lose key areas, so it could mean that they're holding up Big longs, yeah. Yeah, and with all of that analysis that I just gave you, the fact that there was so much market selling off of that news and they absorbed almost 10,000 contracts at almost every level, I think is really important, right? People that are just looking at the chart, they don't see that. But there was somebody buying through that whole thing. And I say probably it had to have been profit taking. It's just like the market is this huge complicated system. And there are things that you can see at every spot of the system that could potentially affect the trade that day. And people want to look at like the one thing. I was watching this guy on TikTok the other day. I thought it was such a good post. I was going to like duet it, but I never got around to it. But he was saying, you know, like dogmatic people tend to be popular. Dogmatic people tend to be popular because they want to make everything simple. And that leads to all sorts of problems. Like you end up with political extremism and things like that. But if you go in and you want to be nuanced, nuance tends not to be very popular. But nuance is everything in markets because you have to find the edges that haven't already been arbitraged out, right? It says, but you don't know and there's no way to verify your hypothesis. So yes and no. There's no way for me to verify that was truly profit taking in that particular situation. No, but there are ways to verify how the market actually functions, right? And so that's one of the things that we know is that when people are positioning short, it tends to move the market down. We know from data that after news, if news goes in the direction that they were expecting, that we tend not to move as much, if not outright reverse. And I've back tested those. And so even though I might not know that's what's specifically happening in that situation, I know that when I see those things and I make guesses about what that's happening, that I can have a profitable expectancy off of it. Makes sense? Okay, well, this spot looks like it's my spot, so I'm going to take it off right there at 21.5. Sayo Bortoli, well, there is a way to check that Indeed COT data from this week. In some instances, yes, you could use COT data. I don't know if it will help us in this case. Because the issue in this case is we believe that they took a big position on Tuesday and then they took their profits on Wednesday, right? So net, there shouldn't be a huge change in the COT data, right? Although in this instance, because there's just been so much selling overall, you're definitely going to see an increase in shorts into the treasury in the COT data, right? Ways to verify how the market's actually functioning. So this is where I think that like the math is so incredibly useful, and I like here again, it's like it comes down to nuance and sophistication and complexity, and the majority of people don't want to go through that. They want to say, well, here's a pattern, I can see the pattern and I can trade it. But where the edge is almost always, in my experience, is going and actually testing that setup that they do, and you will often find, yeah, actually there is maybe something to it, but trading it the way that they're trading it, they're not going to make money off of it because they're not going to understand the nuance, the one spot where, you know, this particular thing matters or doesn't matter, and that's where they lose the money from, right? So when you go through the math allows us to verify why the market behaves in the way that we see. We can look at certain market, like the square root laws is probably the the best example. Is we can go in and, you know, firms test their market impact, and they know from experience that it follows this formula, constant based on the instrument that you're trading times the square root of the size of the meta order over volume. Like they've known that for decades, that it behaved that way. But it wasn't until, you know, I don't know when it happened, when they developed these models, but it wasn't until more recently that they mathematically described why that happens. And because they can mathematically describe why that happens, now they have now they know why does the market function in that way. And why does the market function in that way? Because of the market liquidity. It has to do with the market liquidity. Whereas there was all these other theories about why it happened, like, oh, if it's too big, then people just ignore it, or what. No, it was because of the market liquidity, right? So we can do those sorts of things. So that's where I can tell you, like, generally speaking, if we have a move up, there was more people positioning themselves long in that move. So even though you might not be able to do like the specific math that I do with my model, unless of course you go to speculatorseth.com, you download it, try the trial, subscribe to my channel for $5 a month, and then send me the activation email so that you can look at it too. And then you can really see like exactly what the average position is, right? And how big of a position it might be. But you can just generally go in and look at it and say, okay, well, they were buying into the move. News ended up being bad, but not terribly bad. They're probably going to exit their positions and push the market back down. And that's what it looks like happened here in the evening in this case. And then the treasury started moving back down again, and that seems to really be hurting them. Right? So we want to find facts about the way that the market moves, and then we can make trading decisions about it, wherein you might not know exactly what's happening there in that all the time, but you can know that if you trade off of it, that you can have a positive expectancy. And maybe sometimes you'll make money even though that wasn't actually what was happening. No, the Fed buys $6 billion of 4 to 5 year treasuries today, and then 8 billion in 2.25 to 4.5 year treasuries tomorrow. Okay. Well, did you see how effectively I dealt with that? Yeah, it's a guess as to why what happened, but it's a guess based off of what is the most likely thing to have happened based on what we know about how the market moves. Right? Like in this one, I didn't necessarily know that they were going to stop at 21.5, but I took it off there because I could see the liquidity hole forming. I could see. So like the thing that I'm watching is like there was a lot of transactions there, and then all of a sudden they can't hold liquidity there anymore because everybody that wanted to buy or sell in that area got out, and it creates a hole. And when you get that hole, that's like the best place to get out, because you know, if we're going to go lower, that means that you're going to have to get a lot more buying. You're going to have to get a real push of market buying to come in and push it out. I didn't necessarily know for sure that that's what was going to happen or what was happening, but it worked really well. Are we looking at the 33.83.79 area? Oh, I'm talking about here in the 10-year. So at 135.21.5, there was like what I call a liquidity hole, which is that here you've got people that want to sell, right? And they look like this. And people that want to buy, and they look like this, right? So remember, liquidity is always going to be, sell side liquidity is going to be above the current price, and buy side liquidity is going to be below the certain current price, right? And then what happens is the people that are at this particular area are able to come to an agreement, or they're able to make transactions, right? And then because the people that wanted to make transactions at that area already did so, they don't offer very much liquidity at that location anymore, right? So now you get a profile that looks like this, where, hardly anybody really wants to transact at that spot. And anybody that wants to transact a little bit lower wants to buy. And anybody that wants to transact a little bit higher wants to sell. And it gets stuck. And so you end up getting a ton of volume trading at that location. Not necessarily because they agreed on price so much as it was that there wasn't liquidity there. And this is where it's like there's math for this, right? So when I start to see there was a big transaction there, and then all of a sudden it's ticking up and down, back and forth off of only like 100 contracts, then I know that the hole is formed and that it's time to get out, because otherwise I would have to wait for another wave of buying or selling that is less likely to happen, and I don't know when will happen, right? Unless it was like some piece of news sentiment that really made me confident it was going to keep going. Oh, hi, John. Bots. By the way, we need to, well, I don't know if we necessarily need to get together, but tell me your thoughts on this. I read a book where they were talking about directional change. So basically, they were just saying the swing indicator, the zigzag indicator, basically, and they were saying, hey, can you use what the length of the zigzags are as a proxy for market volatility? And then they went and they did the study on it, and they found that yes, actually you can. And if you go in and you say when you're getting a certain amount of market volatility based on the zigzag, you tell your algorithm to just not trade it. And what happens? Well, turns pretty good. Turns out that it's pretty effective. It made the robot better if you just don't trade that area, right? So then I was looking, I was like, well, yeah, but we use the pivot point, and we've found some things about the pivot point that suggest that it's possibly more predictive. Yes. But when I was reading through all of that, I kind of started to realize a couple of things. And one of the big ones is that on the zigzag, you can change the amount of that it has to come back for it to be considered a zag, right? And so I can go in and I can set my zigzag to be a higher number in order to get the higher time frame trend. So when I started looking at that, all of a sudden I was like, oh, maybe there are some advantages to the zigzag. They're also doing this whole thing about, like, in their study, they did what we did in your pivot indicator, where there's a spot when there's been a pivot, and there's a spot when that pivot has been confirmed. And so they tested out, what do you do just if it's been a pivot? What do you do if you wait until it's been confirmed? And they tested those differently as well, and they found different statistical properties of those. So it seems to me that it would be worth it to be able to use the higher time frame stuff to go back and get the redo your indicator as a zigzag, so that we can use it on different time frames. Might be a different conversation, but I've heard that according to Elliott wave theory, the lengths of the zigs and zags tend to have lengths that are ratios of each other. So we've done a kind of a study on the length of the pivots, and it was pretty Gaussian. We can pull John in here if you want. Not if you really want. We've been saying that we were going to do that. You saw my debut in the series Turn? What is that? Oh, ha, 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 ha. That's funny. He does look up a little bit like me. Yeah, it's definitely got that British look that I got from my grandfather. Okay, so by the way, on the open here, there was a pretty solid hit of volume down below, and we're coming back up. So I'm paying attention this time. I'll poke you in Discord, John. Here, I'll call you. Hello, so can you hear me? Okay, let's see here. Which one is it that I need? Is it that one? Say something. Oh, yeah, I go and mute YouTube. Oh, you know what? I need to do it here. I need to, hold on a second. Settings. Voice and text. Output device. Virtual audio cable. Okay, now they should be able to hear you.
Testing 1, 2, 3.
Yeah, there you go.
There you go.
Now you can hear them. Anyways, so what was I saying? I do think that the pivot seems to be a better, like, the reason why it ends up being like a really great place to say that the pivot happened is because you're looking for an event that's not particularly common, whereas a move that's 16 ticks, that could just be random chance, so you get swings that are just random chance. But I think the advantage to the swing indicator is the ability to change the size of the swing. And then you could go in and you could do something like you could add 3 swing indicators on it, all of slightly different swing sizes, and only take trades based off of the combination of the time frames. So whereas with the pivots, to do that, we have to like add a higher time frame data series to do it.
I thought the swing indicator was based on number of bars to confirm the swing, like a 2 bar, 3 bar, 5 bar.
Is it?
Yeah, I don't think it's the size of the swing. I think it's the number of bars to confirm it.
Let's see here. Well, it might be different for these different ones. So I keep saying swing indicator, but I really mean zigzag.
Oh, okay.
Zigzag, yeah. Yeah, zigzag indicator shows trend lines filtering out changes below a defined level. And then it says here, oh, here it is, on bar update. And is over high deviation. Yeah, so it is. It's like it requires a certain degree of change, and then. By the way, I should have.
Bars.
Yeah. Now swing, maybe it does. Let's see. Swing. Oops, I clicked it wrong. Oh man, I'm disappointed that came back so hard on me. So I probably would have wanted to take it off there, but it's okay. I don't need to take another. I don't need another really good trade. I already did good. This one might be. Yeah, this one does seem different. Swing high candidate. Then he goes for strength. And so now it's gotten a little too complicated for me to just really try and read it here on stream. Yeah, but so I'm thinking what we should do is we should go and take your pivot indicator and plug the zigzag qualifications into it and see what happens. Because it did find, so then I had this one robot. I don't know if I explained to you how it works, but it's based on order flow imbalance. And that one, I went and I added zigzag as a filter on it, and it improved it. You know, it wasn't too great, but it improved it a little bit. So then I'm wondering, like, well, okay, if I can actually say, like, is it confirmed and all of that sort of stuff, then what do you get? Still there?
So you're still testing?
Yeah, I'm still testing them. So this one, I don't know if you can see it on the screen, but Jay, he's, I don't know. So generally speaking, he does okay. But the way that he's doing it is sketch.
What are those indicators on the bottom of that chart?
Which one? The one on
J.
in the bottom right on J?
You just dragged it over to the screen.
Yeah.
I can see it.
So one of them is my resting orders.
Right.
And one of them, sorry, hold on. Let me just mute my new squawk here. So one of them is my resting orders algorithm. Mm-hmm. So there's a certain way in which it looks at the limit orders to determine which direction the market is.
Right.
And this one is like the, how do we say it? Like the imbalance in between market buys and market sells. So what it's saying is, if you get to a certain point where the order flow is too far in one direction or one sign, let's say, that's when it tries to fade it. And it works pretty well. But the issue is that you get these sorts of things where it's like, okay, so well, this one right here is a great example. Where's my thing? Okay, so we can see that it crossed our threshold 3 times during this down move. 1, 2, 3. Right?
Mm-hmm.
So do you want to take it there, there, and there? Certainly not. Especially from our perspective, like the human perspective. When we look at it and we're like, well, we had a pretty good attempt moving higher. It failed. They came back to the open, and then you got a really strong order flow going down the other way. So that's not something that I necessarily want to fade, right? And so the way that I'm trying to determine that as a filter, because I don't know how to express that programmatically, is I'm trying to use the book. So when I look at the book, I see, okay, there was pretty strong bias on the book that, you know, limit offers, sell orders, you know, holding and it coming down and the buys getting out of the way. So ergo, I don't want to fade that one.
So that's a one range chart on the micro ES?
Mm-hmm. Yeah, and it reads them on a one range. So basically what that means is that in order for it to like trigger, you would have to have, you know, them clear multiple prices consecutively, where the tick was all 100% sells. You know, there was like no buying whatsoever. But you can see, like, I went back and like I back tested it and everything, and it actually is a really good predictive signal, actually. So when I did it with equal risk reward, it was like a 55% chance that it was going to reverse. And then what I did is I said, okay, like let's try like running this on a combine the way that all of the people that pass combines do it, which is by taking on excessive risk too. So it's like we have a predictive signal, and then we have a stop that's larger than our target, and we should be able to hit like an 80% win rate or something like that, right? Well, what happened was, I know, right? Well, it is supposed to be funny, right? Because kind of part of it
is,
you get
all wound up over your percent win rate.
Oh, right. But it's intended to prove a point.
We got to focus on reducing the loss rate.
Sure. Well, that's what it is right now. But this is the interesting thing about it. So I start testing it, and all of my algorithms do what they're supposed to and get it where they appear that they're supposed to, right? Mm-hmm. Except for J. And I don't know if it has something to do with the way that NinjaTrader processes win range bars or what. But what will happen is sometimes the backtest will say that you get this price, and J will be like one tick higher. And that one tick makes all the difference. Like that one tick changes it from you winning like almost 80% of the time to you almost always lose. And I was like, oh, what the heck? So then I said, well, what happens if I put it on the micro? And when I put it on the micro, I don't get that problem. Well, I mean, it's still there, but it's not as severe, and it can come out making money. So it's like I have found I believe that what has happened is I have found a predictive signal that high frequency traders are already taking advantage of, but they aren't taking advantage of it in the micros because it's not worth it for them. That's what I think I've found. But you're right. It's at that point, it's about, reducing, getting rid of the losers. That's why it's like, well, we really don't want it to take it when it's like a really strong downtrend. So it started going through like every filter I could think of. So I tried the swing and everything. I tried a couple of different moving averages. I tried the whether we're above or below the open and all of those things. And the issue with almost all of those filters is that you are essentially removing half of the trades and maybe increasing your win rate by like 1%. So it doesn't really help you. You end up making less, essentially. But the directional change one, or using zigzag, I don't know how effective that test was, but what I programmed up did appear to help a little bit, but it still wasn't enough. Now today, this is the first day me trading it with also trying to take into account the book, which I kind of avoided doing because I can't really backtest the book, right? And so far today, it hasn't taken one. So now what's happened is I think I've created a set of conditions that are too difficult to reach.
Right.
It may just be the day, though.
Filtering.
Yeah. But I don't know. I haven't found a simple signal that on its own gets as high of a win rate. And because I've certainly done things like Joseph. Joseph is a good example where that thing was really designed to just catch them and let them run. Like that is all about just finding the spot at which there's possibly a turn and then getting the best position off of that you can, and then trying to let it run. And that's how that one ends up making money sometimes. In fact, actually, it's doing pretty okay. It's in a long right now. But so I had done those. So then I kind of turned back and I was like, yes, but what I really want is something that is truly predictive, like that it has a better chance of, on equal risk reward. And this is the only one that I've been able to find. It's really freaking hard to find.
Predictive, as in you've got the answer ahead of time.
But predictive, in my opinion, is given an equal risk reward, it will hit your target before it hits your stop more than 50% of the time.
All right. Okay.
Because my whole, I don't know if this is like the axe to grind, but the thing that I see, because I troll all of the forums and everything, is that a lot of people that are claiming to have success are doing so because their edge is taking on risk. They have a stop that's like, twice as big as their target and 80% win rate or whatever. And that's great. But you just got to realize that the reason you're making money is because you're taking on risks that other people don't want to take on. And there's some big problems with that.
What's that oscillator you've got above in the middle panel of that chart?
The one that's green and pink.
Yeah.
It's I took the super smoother and modified it. So
You modified it?
Yeah, so I have my own indicator called order flow delta that does a little analysis on that I don't really want to go into on stream. And then I'm using the super smoother to determine what the average of that is.
I started messing around with the RSI the other day.
Oh yeah, okay.
Actually, if you want to walk through it, just open up a 5-minute chart of.
Sure. Let's move this one out of the way, and then we'll pull up
block
chart.
sell.
You know what? I'm glad that I'm talking to you because I would be so tempted to take a trade in the E-mini right now, and this does not look like a favorable market for me all of a sudden.
Well, it looked like it wanted to take off, and then it stalled for some reason.
Yep. That was the one where I was like, I wish I was a little bit babysitting it a little bit more and had taken the profits because I made like 40 on it and I gave it up. I let it just go back to the stop. Okay, 5-minute chart, and then you want RSI on it.
Mm-hmm.
Just the regular old RSI, right?
Yeah, 14 period.
Where is it? There we go. RSI, 14 period, and 3 smooth.
Make it 14 and make that.
Oh, really? Okay.
Make that orange signal line transparent.
This one? The average one?
Yeah. Just make that transparent.
Okay. Okay.
Now go back and put super smoother on top of the RSI.
Oh, okay. I see where you're getting.
You got that GPI one?
Yeah, it's the one up here, huh? IR super smoother filter input series should be RSI down here. RSI 1414 on the RSI plot. Okay.
Right.
Okay. Hate that it always puts it up there.
On the right pane.
Okay.
There you go.
Well, that definitely gets rid of a lot of the noise.
Yeah, you see where it changes color? Oh,
okay.
One other thing. Throw a 50 line across that, a horizontal line.
Oh, okay. F6.
At the 50.
At the 50. Dun, 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 dun. Okay.
Okay. So if the RSI is below the 50, you're leaning to the short side.
Right.
If it's breaking above the 50, you're leaning to the long side.
Right.
And then look at the color changes on the super smoother for your signals.
So would I be looking for it to change from green to purple when it's below the 50, and that's when that would be where you would want to take it short? Like right there's probably the best example. That is interesting.
I was actually talking about the 50 line is more of a guide than a signal, if that makes any sense.
Oh, okay. So then we could for instance take that one right there short.
Right there, yep.
Yep.
And then go to the right about an hour, where it turns from red to green down near the 20 line.
This one.
Next one. Next
Take
break.
that one long.
There, long in there. But it's below the 50 line, so it doesn't have a lot of legs, right? Do you know what I'm trying to say?
Yeah. Wondering.
Anyway, I thought it was interesting.
I'm trying to remember how it's calculated.
Which? The RSI?
Yeah. Okay, it's
Probably
100.
just a couple of moving averages.
No. It's 100 over 1 plus the average gain over the average loss. I see. Oh no, that actually makes it even more interesting. Okay. Huh. So when I've done some testing on just the pure RSI, because this one comes up so much. I don't know if I've ever shown this to you. Let me pull up the strategy analyzer here. So if I come in and I do an optimization, it's in under oscillators, RSI. Okay, well, we can do it on a 14 smooth, since you were looking at 14. And then we can do a bunch of different targets here. Let's say 8 is minimum. We'll go up to 24 by 4
Is that ticks or points?
ticks.
Okay.
And for targets, we'll start with 0.5 and we'll go all the way up to 10. So that should give us a lot of iterations. And then we can just turn off targets altogether. Optimize. And then we'll come in and we'll only do 2020 because I don't want it to take forever. Include commissions, ES. That looks good. Run 200. It shouldn't take too long because it's just a no tick replay or anything. It'll go through them pretty quickly. Yep. No, I hate it when it does that. Ace took it short, but he didn't get his runner. Say, Ace, you got it. This is why you got to get on the Discord. Come on. Okay. Oh man, none of them. None of them, huh? So here, so the best one that it found was a 20 tick stop and a 5 reward ratio of 5. But notice that all of the other ones were not using targets. See that?
Okay.
So
It's a little hard
when
to see, but yeah.
oh yeah, sorry. Okay,
Not
so it works better on long trades. That was what we would expect because the S&P 500 has a long bias.
Right.
So what happens is retail traders come in and they test this without targets. And they come in and they say, oh, 66% win rate. These are really good. Right?
Mm-hmm.
But what they don't realize is that your ratio of your average winner to your average loser, your reward ratio, is 0.5. So what does that tell us? That says that the reason that this strategy, when it's going long, makes money is because it takes on excessive risk. Right? So then when you go and you look at the RSI itself and you say, okay, it's doing it when you get below the 20 and when you get above the 80 or whatever the lines are, right?
Mm-hmm.
That makes perfect sense. You're taking the trade at basically the point at which it seems the riskiest, right?
Right.
And then you come in and you look at these ones where we just take the targets, right? And here with oh well, that's a 1-to-1. Let's just come back here for a second and just run a 1 back test where we're doing. Oh, actually, we should do it like this. Where target is just always 1. True. So then we come in and we test it. Okay, equal risk reward so that we can see what is the percent chance that when you touch that it actually will work out. It's 50-50. This one, how much was it? With a 24 tick stop? Okay, so it's 50-50 depending on your stop. Larger your stop, probably the better that it's going to work. So it is like there is something to it, but it's like way more nuanced than what retail traders think, right? But I find your thing interesting because what this is basically doing is it's saying when the rate of change, when price starts to increase more than it decreases, then it flips it.
Right.
And that is interesting to me because that seems like much more like the way that most retail traders watch it in their head when they're tape reading, right? Is that they're looking at like the swings and they're being like, okay, well, like it moved up 4 ticks and it came back 1. So it seems like that buyers are in control right now. And I've had a hard time finding indicators that express that, but that might do it. So I should come back and we can try back testing that later.
Well, just take a look at it. I thought it was interesting. I like the way that it appears to look on a chart.
Yeah. And it might make an effective filter.
It may. Yeah.
Might make an effective filter.
This morning's open isn't really a great example because it's been such a shot fest.
Yeah. This whole week has been.
Yeah.
I mean, I thought it was just because the rate's going down. I was reading that a bunch of people thought that it was because of the Chinese New Year. So then they wanted, China coming back to work today that markets would start going back up again and that things would be going better. But now you look at this open, it's just been a complete shit show. Pardon the language.
That's probably because Rush Limbaugh died yesterday.
Oh, you think that's what it is? It's Rush Limbaugh. Without Rush Limbaugh's guidance, and capitalism is lost.
That's right.
Directionless. I actually didn't see as much about that as I thought I would yesterday. All of the conservatives.
I think what's really in the news is Trump called in to talk about the loss of Rush Limbaugh, and all he talked about was the loss of the election.
Oh, really? I didn't see that.
Oh, man. Unbelievable.
That's funny. Well, I'm telling you, it's going to come out any day now. My theory has always been that we'll find out after he's no longer president. But I'm telling you, he's ADHD, and that explains everything about him. Okay. Yeah, no, I hardly saw anything on my Facebook about him. I saw way more about Texas.
Exactly. That seems to be in the news. Well, I think he was diagnosed with stage 4 lung cancer last year, right? So
yeah, it's been they knew that it was coming. In fact, a lot of people didn't think he would make it to the election.
No. Well, I don't think he's been on the air since Christmas, is it?
Pretty much. Really? Oh, I didn't know that.
Yeah, I think he did his last show back in December. I think. I don't know.
I do remember hearing a rant from him about the election, but that might have been before December. So,
yeah. Anyway,
the Texas thing, though, like especially when you get on Reddit, man. Oh, that's all they want to talk about with Texas. So explain this one to me. The big thing is that Texas wanted their own power grid. So that means that they can't bring in power from other states. And none of their power generation, well, not none of it, but a lot of their power generation was not winterized. So a lot of people are talking about windmills, and I'm sure that has some effect, because they said that it was like a 10% loss from renewable energies, but it seems that there was just as much, if not more, lost from like their natural gas plants too. Weren't able to handle the cold. And
gas plants, coal plants, and nuclear plants, they all had frozen equipment, gauges, low gas pressure, every problem that they could have had. And they didn't lose 10% of the wind production. Wind only accounts for 10% of the production.
Oh, right.
Okay. At all. But if you listen to Tucker Carlson, man, oh man, he says
they're all on the
and that's why it's blowing up.
Well, they're definitely
the Green New Deal.
They're definitely trying to blame it all on the renewables, and I don't think
how can they blame it on the Green New Deal and the Democrats when Texas is
they did it. They chose to do it.
Doesn't have a Democrat in the goddamn state. Pardon me. Anywhere in the state.
Right. Well, they do in the cities. Dallas in particular is actually very, very Democrats, and Houston too, but not at a state level.
State and federal level, they don't have any Democrats.
Right. So they're trying to play that game. Then on the other side, the political side, they're like, oh, you guys all been saying that Texas is so great and that they should be their own state, but it looks like that they're not. And I'm almost sitting there thinking about, so this is the thing that I'm like, okay, this doesn't make sense. So California has rolling blackouts all the time, like during the forest fires and stuff, because there's concerns about the power lines sparking fires, or I never completely understood what the deal is with that. But the point is, for the past 2 years, they've had like rolling blackouts in California during the summer, right? Mm-hmm. And then they turn around and Texas has experienced a once in a century weather event, and that took their power down. Right. How does that mean that California is better than Texas? You get what I mean? It's like, it seems just like opportunism, because when I look at this, I'm like, well, they weren't prepared for it. That's sure. There are a lot of things about the way that they did stuff in Texas that made the problem worse, but they're just going to turn around and they're going to fix all of those things. And then because of this, their system is going to be that much better. You know what I mean? Whereas in California, it's like it's going to happen again this summer, probably. Right.
Well, I don't know. I mean, Texas is independent completely, though. I mean, they don't share any of the federal power grid, right? Nothing. It's all it all belongs to Texas. So they don't have the ability to go outside the state and get electricity to keep things moving for them, like every other state does.
Oh yeah, totally. Well, here Ace says it's okay to not be prepared for a once in a lifetime event. I'm not gonna say that it's okay, but I'm gonna forgive people if something that you never thought was gonna you never even considered happen. It's a black swan event, right?
Pretty much, yeah.
Especially with news. So I should ask my father-in-law if he knows anything about what's happening at the power plant where he worked, because I would think that a nuclear power plant would be prepared for that sort of a thing.
You would think so.
He would think so. I mean, I know that they rely on the water and everything else like that, but I mean, surely they would. There's got to be some sort of contingency plans for that in case they can't get water into the reactor and stuff. Like, that's crazy.
Yeah, well.
Let's see here. Keller says that they try cutting up firewood. No, like, so my understanding is that they are, and like they've already, like, there might be firewood at the store. They've already sold out all the firewood at the store, and like all of the easy access firewood they've already used.
Yeah, but the reality of it is not every house in Texas has got a fireplace to begin with.
Yeah,
right?
Exactly. And you're not going to sit outside.
They might have smokers in the backyard, but they don't have fireplaces in the living room.
You're totally right.
So firewood isn't going to help them unless they want to stand outside around a fire.
What I was reading was that it was... So some areas do have power and some areas don't, because the issue isn't that the snowstorm like took down all of the power lines and stuff. Like, that's what happened here in Centerville. It took like 2 or 3 days for them to get the power back on because the wind blew over all of the trees and just decimated everything, right? But apparently the issue there is more that everybody is using power to generate heat, and their system is only designed to like be able to deal with that power consumption at the peak of the day on a hot day, and not 24/7 cold. And then some of the power stations dropped, and so they have power, but just like not enough for everybody. So some places have power and they don't, and there are situations where it's like you go across the street and they have power. So what's been happening is like they'll send all of their kids to live with the family across the street, but not them, because there's not enough room for everybody. that's when I started thinking about that sort of stuff, like that kind of gets kind of scary, because when we had the power, we just hunkered down and we were just kind of chill. But now I'm thinking like, oh, in order to prevent my children from freezing to death, I need to send them over to the neighbor's house. Ooh, that is scary. What are they saying here?
Well, they're sitting in their cars trying to stay warm in the driveway.
I would rather go solar energy. I don't know. The whole thing. This is one of my big pet peeves. Like, there's political opinions, and it's like maybe you're right or you're wrong about something, and there's a lot of, so it's, you kind of got to pick and choose your battles, But, and on the Green New Deal thing, I'm always taking the position that I don't particularly care if global warming is a thing or if it's man-made, because it appears to be a favorable business opportunity. Like, if you're buying solar stocks, like, you're doing well. They've been doing well, and people want to buy them. But the thing that I'm 100% positive on, and this is where it's like, you can empirically prove this thing. If you're really serious about climate change, you should be pushing for nuclear power. And everybody's always more interested in wind and solar and all this stuff. And I'm like, come on, like, we have the technology to fix this problem. You just got to let them develop new ones. and you develop new ones that'll be safer, more efficient. I just don't get it. I just don't get it. Anyways. Fireplace is a great way to lose all the heat up the chimney. I guess I didn't do so. When you were younger, do you remember when they were like making movies about, you know, a nuclear power plant failing and all that sort of stuff?
Who are you talking to about younger? You talking to me or Ace?
And I'm talking to you. Ace is well, he's older than me, but he's about 5 years older than me, I think.
Yes, I remember the movies about the power plant failures.
You say so. Mark says you can't be fully independent with nuclear power. What? Expand. That's an argument I haven't heard before. Yeah, most of us use cheap natural gas for heat and hot water. Yeah, that's another thing. They don't, but well, actually, Ace, in Texas, a lot of people use natural gas for their heat as well. But what happened is when everybody is trying to use the natural gas, the pipes weren't able to keep the pressure. So then nobody has natural gas.
Right, because the pressure gets too low.
Yeah.
Too much demand on the system.
That's also something probably because you work for an oil company, right?
Long time ago, yeah.
But what exactly kind of things did you do? Because I've always wondered, like, wouldn't working there let you know a lot of things about how the oil industry works that would be favorable to like trading oil?
No.
No.
Not what I,
Not what you did.
not what I did.
Oh, okay. You can't have a nuclear reactor in your backyard. Why not? That is the issue. You've seen these things they want to talk. There's a company that's making micronuclear reactors. In fact, Bill Gates is invested in it. I wish I could be invested in it, but you can't. You'd have to be a qualified investor, and you'd have to have the foot in the door, and it's retarded. But they want to make it. But I don't think they'll ever let you have one in your house because, they're not gonna let you have uranium in your house. That would be really, really bad.
Well, Gates is invested in it because he wants one for his DeLorean.
Oh my gosh, this reminds me of this. So on Netflix, there's a series about spies. Mm-hmm. It's really good. And it's basically like every cool spy story about technology and things that have actually happened. And one of this
preview.
Yeah. Oh, I thought it was so good. I haven't watched all of it. I got to the episode on special ops, and I haven't done that one yet. But one of the episodes is about poisoning. And particularly the Russians, I've poisoned a lot of people in the past. And one of the things that they did, I remember, say what?
Allegedly.
No. It was let me go through this story. They used a radioactive particle. I forget the name of it, but it's like a step or two past uranium. Okay, so like it's an extremely radioactive particle, and they literally used something that was like a fraction of a grain of sand was how big this nuclear particle was. And they poisoned somebody with it. And, as soon as they gave it to him, he was basically dead. He died of radiation poisoning. And then the reason why they know that it was the Russians and how it went down was because this thing was so radioactive that everywhere that the assassins had gone, they could detect the radiation. So like we went to the bathroom and everywhere on the plane that they were on. And the thing is that it appears that their handlers didn't really tell them what they were dealing with, because they were not careful with it at all. They went all over the place and left radiation everywhere. And it was just mind-boggling to me that there's a substance out there that's so radioactive that something smaller than a grain of sand can kill you from the radioactivity. You know? So yeah, they wouldn't allow you to have uranium in your house like that. Enriched uranium. No way. He says, I also want to mention that I'm willing to teach anyone. Did you see that post that I made on Futures.io about execution impact? Oh, let me find it.
What's this? Ace is willing to teach anyone all he knows about trading.
Yeah.
And he's going to give away how he takes a trade signal.
Well, I think I explained the signal to you, right? It's not...
So why doesn't
not
he
magic.
come on the air here and talk to us?
Because I don't know. I really don't know. He claims that he can't get into Discord, and then he never bothers to try it again. Sometimes
that Discord with a multi-level login bullshit, that's a nightmare.
I know.
It drives me nuts. I tried to log in from my phone the other day, and it said, "Oh, you got to have your third word password or whatever the hell it is," which means I got to come downstairs, turn on my computer, find the list.
Oh,
enter one of the names. Like, oh man.
Do you have the Authenticator application on your phone? You should do that.
No, I shouldn't.
Do you have an Apple or an Android?
No, I have an Android. I have
Okay.
a Samsung.
So on the Google Play Store, there is an application created by Google called Authenticator. And you install it. And then you go and you enable two-factor authentication on Discord. And it'll walk you through it. It'll like give you a number and you have to put it into your Authenticator app, right? And then what will happen is anytime that you want to log in, it will ask you for the Authenticator code. So you just open up the Authenticator app and copy and paste that code. And it's like a code that changes every minute. It's an asymmetrical key. It's like, yeah, my thoughts exactly. Multi-level password BS. I mean, he posted
Sorry, were
some.
you talking to me? I kind of drifted off there.
Yeah, I kind of moved on. But yeah, you use the Authenticator and you have to do that stuff. Okay, no. Well, this will really put you to sleep then. What I'm going to show you here.
Great.
Yeah,
Perfect.
Let's see here. Where do you get it from? Statistics. Find all threads. There we go. Oh, I put it in the Elite forum. It looks like people read it, but they didn't actually. Nobody's responded to it. Okay, so there's a model that was invented in 1985 by this guy named Kyle. So they call it Kyle's model.
Okay.
And Kyle's model is basically the grandfather of all automated market making programs. And
okay. Where'd you find this little nugget?
It was from that book that I gave you.
Oh, okay.
Yeah.
I thought you got this in one of your Trump handouts.
No. So in Kyle's model, essentially what he's doing is he's saying, based on the imbalance that you can see in the order flow at that time, what should you adjust your bid and ask to be in your spread so that you'll break even on average and just make money off of the spread, right? So that's the way that they try and do it. Everybody thinks that it's like, you only have to buy here and sell here and you make money on the spread. Or like, especially the people in stocks, they think that that's the way that it works. You put the bid and ask off there and nobody else can buy it, anything else. But that's not the way that it works, right? You can put a bid or ask at anywhere. So they have to adjust. They have to say, okay, if it's really moving up, then I have to adjust how many contracts I'm taking and where I take them at to adjust for it, right? So that's what this is trying to do. But the way that Kyle's model looks at it is it says there's two people. One of them is the market maker, who we call Bob, and the other one is the informed trader, who they call Alice. And these are like the conventions that, at least in the book, that they use, but I think that it's an industry-wide thing, right?
So is this like Bob and Carol and Ted and Alice?
Yeah.
That's a
I
movie
think so.
from before your time, I'm sure.
Oh, it's maybe that's where they got it from. I don't know. Remember, this was written in 1985, like the year that I was born. And this is where it starts to like, it's like almost everything that we do in trading, or that retail traders do in trading, is based off of stuff that's like 30, 40 years old. Anyways, this is like a really, I think, a really important piece of information to know. Anyways, so he goes in, and what they try and do is there's some math, and I won't go into all of the math, but that's what they're trying to do. And they come out with these two key equations that are important. And one of them is the market impact. So this is like, if you take a trade, what is the impact that you're actually going to have on your instrument? They call this Kyle's lambda. So a lot of effort is put into determining what is the Kyle's lambda for your market in general and at that particular time, because the higher the lambda is, like, the wider you're going to want to make your spread, and so on and so forth, right? And then there's this other part right here, which is Q. The optimal Q is, okay, so if Alice knows something, and she knows that that thing is going to move price to a specific price, right? Like, she knew that because of what's happening right now, it's going to go to the volatility range first target, for instance, right? Or in our instance, we know that it's going to move 8 ticks, right? Then we can determine the optimal Q, which is the optimal number of orders for her to use to take advantage of that, given that she can trade as many contracts as she wants. Does that make sense?
Yeah, sorry, I was laughing at something I just read in the chat.
Oh. Okay, I thought you were laughing at me. I was like, gosh dang it, Potts, this is serious stuff.
No, I wasn't laughing at what you said, sorry.
It seems to me that you can either trade and make... Oh, I already made the money, Ace. You missed it. Did you see? I already did it.
Well, they definitely sorted this thing out to the downside. And if you look at that RSI, got you a markup. It never got above that 50 line, right? So it stayed with a bias lower. And
it would have given you a pretty great spot to go short right there if you'd taken it at 38.97.25.
Actually, you would have been short on the close, 97.25, and that happens to be an inside bar too on the 5 minute.
It's interesting because you're combining these two things together. It's giving you a pretty good turning point, and it's giving you a good risk reward with it. It's kind of like the normal advantage to RSI and then some with the directional thing. I'll have to back test it and see how it works. Anyways, go ahead.
I just said I kind of like it. That's all.
Oh yeah, I'll have to back test it and see how good it actually is. Because I'm sure that there's going to be a period that it doesn't
add some colors to it,
Right.
My usual thing.
Well, it looks to me like here's a theory that I have. I don't know if you can. It should be mathematically provable, but I think you'd have to use pre-advanced math that maybe hasn't been invented yet. The market cannot. Yeah,
my kind of math. Yeah.
So here's my theory. The market cannot be 100% efficient against all strategies at all time.
No.
And when I say all strategies, I mean all technical strategies. Strategies based off of finding statistical aberrations in the market and arbitraging them out. And let's assume that every found strategy is found and taken advantage of efficiently, which it's not. But if we just assume that, the market cannot be efficient against all of those strategies all the time, which means that it has to cycle between them. So probably with this one, it seems like here when it's trending down and we're moving down, it can potentially give you good entries. So the question is just like, when does it not work very well? But I digress. Yeah, Alice. So this equation right here, this Q, this is the optimal number of orders to trade. It's equal to 1/2 times the distance that you think it's going to move. So like in this case, PF minus PO would be like 8 ticks, right? Over Kyle's lambda. And Kyle's lambda is equal to the deviation in price over 2 times the deviation in volume. Okay, so the math to get to that is really complicated, but the end formulas is actually really simple, right?
Okay.
So I went over and I programmed it. And I said, I'll just use standard deviation of price and standard deviation of volume as stand-ins for these two variables, which is maybe not a correct application. But that's what I did. So I call it Alice because this is what should Alice use. And doing a 2-point target. We'll bring in the period down a little bit so you can see. Okay, so what is this? This is the optimal number of contracts for Alice to trade given a 2-tick target. In other words, if you were to trade this and your size was larger than that at that particular time, the cost of you executing the trade, entering and exit, would be greater than what you actually make from the trade. So once you start trading more contracts than that, it's questionable, right? So when you look at it, and of course, when you get like a ton of volume come in or something crazy happens, and it can get really, really big, right? And you could trade a lot of contracts, okay? But when the market is quiet, like especially pre-market, like look down here, 759 contracts. So the whole reason I was bringing that up is like one of the things is that Ace's strategy uses a moving average, which is a really common moving average. Do you think that more than 1,000 contracts out there might be trading off of that one particular moving average? It's possible. It depends on how popular your trading strategy is. So it kind of suggests that particularly when the market is slow, that even a retail trader has to consider if the combination of them and everybody else that trades that particular signal screws up the edge. So that's where I was saying to Ace, was like, if you were going to teach people, I wouldn't teach more. Well, like for my indicator, I don't think I'm ever going to let it be more than 100 subscribers. If I get 100 subscribers, I'm just going to increase the price. Like, somebody will leave and then I'll increase the price and the new person can get in at a higher price. So if you want to get in, you should get in now. No, there's plenty of room for it, but there's a limit to it. And Ace has been pretty, he keeps his signal to himself. I would be careful about who I give it to. And I would tell the people that you give it to not share it. So that was the point of all that. Mathematical proof. That's why I said it would only take the first 5. Okay, there you go. The first 5 would be great. I really do. I tell you, Ace. I would
200,000 a piece. That's a good round number.
Yes, here's your charge on tons of money. No, there is something about how he does it though. That is beyond just his signal.
That last post was pretty funny.
You haven't exactly been top 6. Yeah, I haven't been top. I haven't shared it with what the actual entry and exit is with them, but
Ace has just realized he's working with Maxwell Smart, not James Bond.
Jeez. Oh man. I'm gonna close this. Do you think it has more in it? Even though it's been pretty ugly and a large amount of volume on the downside, it hasn't really... It still seems to be mean reverting to me. The Treasury, though, really moved. Was there a piece of news while we were messing with all that? How long has it been? The past 30 minutes? What's the past 30 minutes of news been? Northern Ireland extends lockdown.
Well, you had your oil news at 10:30.
Yeah, that helps
for whatever,
too. Yeah, and
whatever
they're they're falling now, aren't they? But it seems like something else happened because the dollar turned up again. Yeah, man, I tell you what, the metal trade, these guys that have been in the metal trade like all year because they think there's going to be inflation or bad things can happen or whatever. It seems like every time that there's an opportunity where maybe metals would turn up, they sell. Because the dollar matters more than the actual supply and demand of the metal.
Oh, I'm wrong. The petroleum report's delayed by a day.
Oh, is it?
It's today at 11. But
lumber futures hit record high $1,000 as gold slumps to 7-month lows. That's interesting because everybody's still expecting inflation, right? Or is it just me? Am I the only one expecting inflation and you guys have all moved on to that there's going to be a crash or something? I represented a private detective who always said 3 people can keep a secret if 2 of them are dead.
yeah.
Well, it's funny. But no, I want to get Ace on the chat so that we can take I think we should give it a whole week. Should give it a whole week and he can sit there and explain what he's thinking and particularly why he's going to take the direction that he does. Because there's like a trigger and I understand the trigger and everything, but sometimes which triggers he decides to take and doesn't take and which direction he tries to take them, I don't understand them. I don't know if he himself completely understands them, but there's something to it where it's like, if I just try and trade the signal algorithmically, or even if I'm trying to fill it out and watch it, I don't make the right ones. And then Ace will come in and take a different signal and it works out for him every time. I don't get it. Sounds like a job doing.
The problem with these algos we try to program, I mean, they just don't do anything with context like your brain will.
I totally agree. It seems to me that any edge that you would gain that's purely based on price movement is mostly been how do I say that? Because I said the market can't be efficient against all strategies all the time. So one of the things is that it's going to pick and choose which ones it's going to, go against. And so the ones that are the most obvious and the strongest are the ones that are going to be gone first, right? So I think that things based primarily on price, you're not going to find much. And if you do, it's going to be tiny,
Mm-hmm.
And that is one thing is that Ace is it's a tiny edge. He only goes for 2 points initially, and then he'll let it run if it runs. Am I getting up early, showering, driving on I-15, punching in? No, you can just get in on Discord. You can just log in when you log in, tell me, and get into Discord voice chat and sit with us, and you can just explain what you're thinking at that time, so we can try and figure out.
He was referring to your comment about doing it for a week.
Oh yeah, no. Well, that
sounds like a job.
Yeah. The other thing is you could just stay up here in the guest bedroom because he lives about a good 30 minutes away, depending on the traffic and the weather.
I think you should think twice about that, Ace.
It'd be fine. The only thing you have to worry about is that's the room that Jerry is in. So he might squawk at you a lot.
Yeah,
Only do one?
That, and if you stayed at Seth's place, you might wake up like Nemo from the Matrix with a plug in your neck.
With a plug in your neck. trying to download his brain. Oh man, if I had the technology to do that sort of thing, maybe I would. Oh. The guest bedroom sounds like a disaster. I like to cuddle. Okay.
Oh Lord.
Maybe we can work something out with that. Seth gets up way too early. I do. You get what time is it? Your time when you wake up? It's like 4 your time when you wake up, isn't it?
You talking to me?
Yeah.
Yeah, usually. I'm usually here by 4.
And why? Now, how did you originally arrive at 4?
Just an hour after London opens.
Oh, okay. So it was because of the trading, purely because of the trading. Man, this is just way too early.
Well, that and if you want to get out before the sun comes up to go fishing.
Oh, okay.
In the summertime, the
you.
sun's up around 5, so I got to be up making my coffee, getting my stuff ready to go by 4. So it's no change for me all year.
Bed by 7? Yeah. What time do you go to sleep?
About 8:30.
Yeah, that makes about sense. So 2 hours earlier than me, and you go to bed 2 hours earlier than me.
Yeah.
Oh man. He has Ace has a very specific set of qualifications. It may be that he didn't describe them well, or like when he looks at the code that I wrote, he will say, oh, maybe we should add this and this. But he gave me a pretty specific set. And when you backtest it, if you just go for the 2 points, it's long term, it's not profitable, but it's not bad. And then when you add in runners, then it makes money. And when you add on top of it the filtering that he does himself, which I'm not exactly sure how he does it, he just seems to be on the right direction more often than not, though. Then you get something that, he's been able to build an account. I mean, he's been able to build up to where he could trade multiple ES contracts from nothing. So I wouldn't say that he does well all the time, but he certainly has had periods of performance that is far beyond what most retail traders ever get. And I know that John has had that as well. By the way, how is the last... Yeah, he's just consistent. How has the last 2 months since the start of the year been for you?
I think it's been great.
Yeah. Are you still mostly trading the ES?
Yes. Yeah. Well, the micro.
Right.
I told you, I set that $50 a day is all I'm looking for.
Oh, right. Oh, so that was another really interesting thing that I back tested. So I had these strategies. One of the things that I've noticed is that almost every strategy that I've ever back tested will have at least one day that is just a complete disaster. And it's so much a disaster that it makes a significant difference to the expectancy of the system. So if I just go in and put a limit, like usually it's $1,000, It can actually be relatively tight too. That's the thing that really surprised me about it. If I just say, if you lose more than $1,000 in a day, stop trading it that day. Makes a significant, it makes like a 0.1 to 0.2 difference on your profit factor.
Right.
And it often, tens of thousands of dollars. So then I said, well, maybe the thing that Ace does well is that he makes his winning trade and then he stops. Like, he gets his 2 points, he lets it run, and if he gets something, then great. And if he doesn't, once he's made 2 points of profit for the day, he stops. So I went and I took his signal and I applied that logic to it. And it didn't work at all. It didn't work at all. Because what would happen is it was a 50-50 as to whether or not you would hit the target. It was like 50% of the time, it would hit the target right away and was fine. And then the other 50% of the time, he just traded a ton and never got anywhere with it. So it didn't make it better. It actually made it worse. But,
well, like this morning, he had a couple of tough ones, and then I think he got a winner. So,
yeah. Well, because it's, like, again, remember that the primary trigger is a moving average. So moving averages don't necessarily have a predictive quality to them. But what they do is they get you in at the beginning of a trend. So if he does get something to run, they can really run, right? And that's where the edge comes from. That's where the edge primarily comes from. So that going across the signal line and getting the 2 points just gives you enough room to be able to let it to run. And then the reason that he's been able to build up the account is because when it's not really working, he just doesn't risk a whole lot. And then he'll end up catching these insane trends and making $1,000 a contract on these insane trends.
Right. And that's the thing you can't program into your algo, right? That's the problem.
Well, I do think that is part of it, because I can program for it to have one contract and then try and let the other contract run. But what I can't program is, when does he decide to let one contract run and when does he decide not to? And when does he decide that he doesn't want to take that signal or he doesn't?
Yeah, and when does he want to add to a winning trade?
Yeah.
Sometimes you just got to know, you got to lean on it. Like,
yeah.
And that's part of the problem, even for a trader, never mind an algo, is you don't know it's a trend day until the day's over. You need to figure that out pretty early on if you're going to maximize it.
Totally. But this is the directional movement thing. This is where I think that if we do things, we make a better directional movement or zigzag indicator. I think that could help us in that respect, because it appears to me that if you look at the zigzags, and you do a statistical analysis on the zigzags, that you can determine when we are heading into that higher volatility regime more quickly than you could just watching the VIX, for instance. What are they saying here? Oh yeah, no, there is another theory with Ace, and this one is kind of conspiratorial, but I've wondered if there is market data that does give you access to who's trading it, and that the algorithm has picked up on that he's an okay retail trader and reacts differently to him. That's another thing that I've wondered, but I consider that conspiracy theory, because every time that I go in and I look at like CME data and try and doing research on it, I'm unable to find anything that suggests that you can see who submitted an order, or anything to suggest that certain market participants can see your stops. I see tons of retail traders claiming that happens, but I'm not able to find any proof.
Yeah, Well, yeah. Retail traders always say that somebody knew where their stop was because they put their stop in a dumbass place.
Oh yeah, totally. Well, and that, you know, my inventory cost basis and the volatility projected range suggests to me that they can calculate where your stops are going to be without having to actually see them.
Right. You need to know. You need to base your stop on something like an average daily range or something.
Yeah. Well, you would have to have a really wide stop is the thing, I guess, right?
Yeah, I guess that's kind of my point.
No.
And then you need to be able to program to have it move with your trade, right?
Right. Because I can go in and I can calculate if we were to turn down again, you know, below 38.70, nobody that is bought today is making money, right? So the majority of all stops will have triggered sometime before 38.70. That's why there's such a slight probability of it bouncing now.
Okay.
Why is my entry point mostly resistance lull? Yeah, I've wondered. I also kind of feel like, so yesterday, well, today, Jay didn't take any trades. Still didn't take any. I'm looking, let's see here. Let's come back and look. Where were some that it should have taken? There's one that it could have taken long. Nah, maybe I need to change the way that I'm looking at the book because it's too sensitive. Maybe I need to look at the larger book. I have ATR with standard deviations to know where to enter on mean reversal trades. So here's the issue with the mean reversion trade using that degree of well, I don't know how to put it other than this. Price is not Gaussian distributed, right? Look at the volume profile.
You mean
It's
for
not,
your
it's,
mean?
yeah, the price is not normally distributed. Price has fat tails and tends to cluster. So things like Bollinger Bands and stuff like that, there's kind of a fundamental flaw because they assume that price is normally distributed and it's not. On the other hand, there are other things like swings. The length of a swing appears to be normally distributed with the fat tails, still fat tails, but it doesn't cluster like price does. So you can kind of try and use those. But even then, you still have to deal with the fat tail issue, which is a whole other... I don't really understand how to deal with that, to be honest. Seems to me like the fat tail is like a inescapable problem.
You programmed a study like that for our pivots, did you not? I seem to remember. Yeah.
And they were pretty...
Just to show the average rotation.
Yeah, but there wasn't... So the thing with those is like, if you look at like a 5-minute range, there's like very clear spots where it's significantly less likely to see a range of this much versus this much. But remember when we were looking at the pivot or the pivots one, that it was pretty smooth.
Mm-hmm.
So it didn't really
jump out at you.
Yeah, it didn't really give you it didn't tell you anything like here's a specific spot at which if you get a swing that's this big, it's best to take profits there or something like that. You can't do a mean reversal strategy if the low of the month gets broken. Well, so those are all... That's where it gets interesting, is like I can go in and I can say, okay, so like RSI and the way that it was intended to be used, that's pretty easy for me to go in and say, here's the data and yada, 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 and it's done. But then you kind of get into all of like these special rules and everything, and you combine everything together. Does it still work? Well, I'd have to program it, and there's like an infinite number of variations of that. So I can't really say that they don't exist or not. All I know is that I've programmed a lot of strategies and I've found a couple that appear to work, but the couple that appear to work, only one of them is actually based on price.
Block sell.
Averages are less feasible in trends, and well, that's true. But so Keller, when I was saying like the fat tails problem, that's exactly what I'm talking about. Is that the market from the most simple and naive kind of analysis has two real modes: a trending mode and a mean reversion mode. And the issue is that when you are in the trending mode, it goes so far that it will wipe out everything that you made during the standard deviation mode. And that's what we mean by fat tails. So that the tails are big enough that it overcomes what you get from the main part of the profile. So then the trick becomes determining when you are in a fat tail versus when you're in the mean reverting mode. And the issue with that becomes that by the time you are able to detect that you are actually in the trending mode, it is usually too late. So all of the research goes into detecting when you are in that trending mode as early as possible. And so that's why we're saying zigzag. There is some evidence to suggest that it is faster. Might not be enough for us to completely be satisfied, though.
No, Bots does not have a channel.
No. He's on Discord all the time, though. He used to have a room. But yep, that's how we met, is I went to his room. And he sure did teach us a lot, too.
I did try.
It did try. Oh, man. It is, this is another thing that is so difficult about trading, is like how much, if you're having a hard time, how much of it is your strategy, how much of it is your market, and how much of it is you? And I don't think that there's really very good indications of which one is which all the time, And I think that the mindset of a trader tends to be that they tend to blame themselves first. But I have always taken the position of blaming the strategy first. And so that's why I always go through and back test it. And then I'm like, see, this thing doesn't actually mean what you all think it means. But there are some things.
I thought you were going to say you've taken the approach of blaming me first.
No. Well, the thing is all... when I think back to things that we've tested where maybe we didn't find a profitable strategy per se, but we did find something about the way the market tends to behave that was useful, I think the vast majority of those came from you that weren't order flow based. Probably the best example, I wish I still had that programmed. I should reprogram it, was the single print thing.
Mm-hmm.
I think I don't have that one because I didn't have the single print indicator anymore. But there's definitely, the market definitely reacts to single prints.
Yeah, it did. Actually,
it's probably a little different now.
It's the one that used to track the gaps for me.
Oh, yeah? You mean like the overnight gaps?
No. Well, when I had it programmed for 7, it would track all the gaps, whether it was an overnight gap or an interbar gap, but it just, I don't know. It just always laid it out clearly for me.
That's interesting. Oh, we could probably convert it if you still have it on 7.
I still have it on 7, but it's I could never understand how to get the rectangles coded properly.
Oh, I get you.
In 8, I had it working fine in 7, but I could never understand it in 8. So I need your expertise.
Yeah, I'll do it. Next time we do one of those things, remind me, by the way, because we should add a limit in there so that it won't draw more than a certain number of those drawings, you know?
Yeah, that's true.
That way you don't have to worry about having too big of a chart on there, because that's been a problem in the past.
I'm going to share something with you. I guess
Sure.
you just want me to throw it in the Discord?
Yeah, just put it right here.
In Discord.
Mm-hmm.
Not in... It's easier this way, right? There.
They want to know what is Bot's favorite food.
Oh, to answer the guy that asked if I smoke cigars, no, I don't smoke. I haven't smoked since last July.
He's been smoke free for over a year.
No.
Not
till July.
Oh, not until July. I gotcha.
Yeah. So those are gap down. Those 3 I indicated there. And you see how that first one was a bit of a surprise, right? After 2 up bars.
So gap in this context is defined as when the open of a bar is more than 1 tick away, is not equal to the close of the previous bar.
Correct. Yeah.
Okay.
And sometimes it can be up or down from the prior close, right?
Right.
But like, to me, that indicated that they were in a hurry to get short there.
Yeah, it means that they completely pulled at a price and it didn't trade.
Mm-hmm.
When you're watching the Jigsaw Dom here, you'll see it as it will just be blank at both the bid and the ask at that particular price.
Yeah.
Or, actually right here at 38.92 and a quarter. You see how the last time it traded up, it was only 3 contracts.
Right.
So that was close to that. They tried to pull it, but there was still a few retail traders there that took it, I guess.
Well, if you notice, there's some wicks on those bars too, right? So it must have come back up a bit.
Right.
That might be your 3 contracts. I don't know.
I don't know. Like, it still looks mean reverting to me. The thing that I'm finding hard to read about this market is I look at it and I'm like, well, I don't know if there's really any reason to trade in it. It looks very mean reverting. But then you'll get these like rushes, be like it'll move and like a lot of contracts seem to be chasing it and then nothing comes from it. So it's almost, and the only theory I have on that one is that like there's a bunch of traders that just really want to take a trade and they're just kind of jumping the gun and nothing's happening.
Sorry, is this in regards to the gaps?
Yeah. Well, just in regards to the way that the S&P 500 has been moving this week in general. What does incorrect password say in here? I think 3 black crows is one that Ninja Trader has, yeah? Let's come back here and look. If it doesn't, we can add it. Three back crows. Yes, it is. Now, this other one, the incorrect password puts in their gap snake, that's not something I've ever heard of before. There is gap. It might be called something different. What's the rationale behind gaps? It's a good question. So I think that the general theory that you're going to hear is that gaps always fill. Well, I've done a study on this. Gaps have a very high probability of filling, yes. But you don't know how long it will be until they do. Like, it could be months until they fill. So I think when I did it on the treasuries in particular, like, I went back to 2008 and there was like 1 or 2 gaps that didn't fill, right? So they do not always fill, but very, very high probability of filling. But that fact ultimately ends up being useless to you because you don't know when they're going to fill, right? If you go in and you say gaps fill the next day, then there's a different thing, and then it's just random, right? So why do people believe in that? Well, I think that there's this thing too that, especially in stocks, you know, you get a piece of news that comes out overnight, it gaps up, and then it tends to trend all day, and that is often the start of really big bull runs. So, you know, I think that that's where statistically any edge that you maybe possibly get from gaps comes from. But when people try and trade like the mean reverting gap sort of a thing, that they say something like they didn't trade there and they will want to come back and trade in that location. I don't know if that makes sense to me per se, but I guess it could mean that there might be some buy side liquidity in there that's just waiting for it to come back, I guess. I don't know. It's just like bad lows and highs. They always get clean, but how to profit from it is another story. We did the bad lows and high, didn't we?
I think I like to use the gaps more for just as an indication that there's been some acceleration.
Yeah. Kyle here was showing me, he sent me a setup and where he was looking for a location where it had formed a number of bad highs. And then I forget what the other part of it was. What was the other part of it?
I've never had a bad high. Sorry.
He just looks for this area to form and then trades when it breaks that, I think is what it was. And it had something to do with like the volume profile and all that too. Oh wait, Ace is back. You didn't miss out too much. Trying out a dedicated server since they say there's an edge with being at the front of a queue. Any thoughts about that? So there's definitely an edge to being at the front of the queue. You're probably not going to get to the front of the queue though. You're probably not going to be the first one in the queue. But the faster you are, the better. You know, like Jay here, we have some evidence to suggest that, you know, with Jay, even how fast it takes your computer to process the bar matters. So I trade when it fails to break those bad highs. But at what point do you know that it failed to break those bad highs? Because it came down through the other side, right? Trying to see me as that sounds expensive. Are you just doing speedy servers or something else? If you were going to take a trade, you would go short right here. Oh, I see why. I definitely see why.
I'm giving an update there on that drawing.
Oh, okay.
Now that it's turned and come back.
Right. Oh, that it's going to come back down, and if you think it's going to come back and fill all those gaps, probably.
No, it already did.
Oh, it did
already
fill
did.
that one, but not that one down there. Or did
Yeah,
it?
it's covered all those off.
Oh, yeah, no, you're right. Okay.
All the way back up, right? But look at the top one. It's still there and held.
Oh, right. Well, it's if I was able to have gotten 38.94, I would maybe, but it would have been, that was a good, see, that was the 2 points, right?
Yeah,
So then we just,
got 2 points.
so then we just come in and we say, okay, move our stop to break even right here, right? And then see if it writes. But then there's some situations where he just takes the profits. And I think that in my mind, this might be a situation where it would be good to just take the profits. I'll see there. It's going to take, probably would have stopped out right there. Yeah. Parameters for failing to break are explained. I don't know why I didn't dive deeper into that, Kyle. I think I was just been it's just not the best week to do it. As I've been trying to focus more on work, and when I'm after work, I've just been, because I don't have my colon medication, so it just like makes me feel really tired. Mark's asking, why do you think a gap signifies continuation? Well, do you think it signifies continuation necessarily?
No.
No. It sounded to me like more like it was a potential point of interest that the market might want to come back to. No problem, take it. Yeah, thanks.
When it I never really looked at it so much as it wanted to come back to it more than when they first happened. It seems to indicate, a quick movement.
Yeah.
And it usually fizzles out, right?
Yeah.
Like in that last drawing I gave you, there's 4 in a row there, pretty much. Almost every other bar.
Yes.
And then that was the end of it.
Yeah. So when I see movement like that, I'm immediately thinking market makers pulled orders. And why did they do that? So then I'm looking for news and everything else to see, was that actually something, or is it going to fizzle out?
Also notice when they climb back up, there are no gaps, right?
Right.
In that little drawing I sent you. Well, actually, I take that back. There is one where it dropped off of that one red candle after it made the turn. But that's the only one.
Don't put words in my mouth. Yeah, that's interesting. It's because again, it's like we are getting those gaps and we're getting those volume spikes and like things that kind of make you think, oh, maybe I should trade it, and then nothing happens. It's like signs of informed trading, but nothing following through. Why do they fizzle out? Well, my guess is that a large trader took a trade and market makers were reacting to that, and it was really just a random event. They weren't taking it because of informed trading. Therefore, the market won't go anywhere. They have to take that position off. And now another thing that we haven't talked about, though, is the treasuries are up at the highs now. And they came back so hard, but that's probably because of the auction, yeah? Do I have that on my
auction?
Is it the 1 o'clock? Is it at 1 o'clock today? Yep, you're right. 30-year tips, 11 o'clock. I think that the treasuries might be moving like that because of the auction. I also think that that was part of why they moved the way they did yesterday. What does fizzle out mean? How would you determine that something fizzled out? I don't know.
Kind of like watching fireworks, you know?
Yeah. It's like it was really, really exciting for a moment, and then nothing happens. You think that it should keep going, and it doesn't.
Kind of burns out, right? So,
Yeah. Now Ace is saying long. But that's just the cross. See that one. So this is well. I think it technically would qualify. In that particular one, it doesn't look like there was enough trend in the other direction to necessarily justify taking it. But look at it go.
yeah, look at the move when that little RSI we were talking about just popped above that 50 line when that happened.
Well, I'm looking at that open because the open is where I kind of get interested.
The open of the day session, you mean?
Yeah, the regular session open at 38.9850. So this is a better example of where, you know, you got the Russian volume. That there appears to maybe be some informed trading behind it, and it follows through with it. Still going, and when they come back up there to the top, you can see a pretty good number of market orders hitting into it. Though it is around 3,900, so I should probably factor that in. There's going to be a lot of volume at 3,900.
So,
wow, it's just if I'm looking there at the DOM and I see like 300, you know, that's usually to me like, okay, this is a good number of people hitting into the upper end of the range. That's good. But if it's at 3,900, then it'd have to be more than 300 for it to really mean anything. Because there's always going to be a lot of liquidity around the round numbers. I don't know what Marco is getting at here.
I don't know. He's really taking the piss. He's pretty upset about using this word gap and fizzle.
Well, I think the way that we're using the term gap is probably different from how most stock traders look at it, right?
Probably.
So when stock traders are talking about gappers, they're talking about stocks that had big move news that happened overnight and they're opening at a higher price, an unusually high price, and they tend to run all day. And they're looking for gappers to just get in and ride all day, or, you know, catch the momentum on them. But there are some issues with doing that.
Well, I know when I look back at my older charts with those gaps plotted, they seem to make sense. Like they seem to actually bring some context that you can't see without having them on there.
Right.
You know, like you get a move that seems to stop in the middle of nowhere. There's really no reason you can understand why it is. And then you put those gaps on and then, oh, look, it happens to close one of them.
Oh. It is. I was wondering if it was Salim. I was like, so
He
I
doesn't
just
care
don't.
about gaps, so he doesn't want us to talk about them.
So he doesn't want us to talk about it. I mean, it does. I guess the thing that it sounds to me like what you're trying to say is there is a reason that they form, but we're not exactly sure if it's a predictive signal of anything, but it does tell you something about the market conditions at that location, right? That the
Correct.
liquidity pulled when it went through there.
Yeah.
And you do kind of have to think about it like, if the liquidity pulled when they went through there, then when they come back, what is going to happen at that point? Because if you're a market maker and you're putting, you're trailing buy side liquidity as it moves up, in the hopes that maybe you get a little bit of a spurt of sell volume and you can catch it and continue catching the trend up, right? Are you going to be more or less likely to add liquidity there where everybody else had pulled at that point?
He's leaving because apparently he's reached the edge of our knowledge.
This guy. I really wonder how old this guy is because he acts like he's like 16.
Mark Kruplikov.
It's Salim. Do you remember the Salim thing?
No, I don't.
Oh, so there was a guy that came in.
I thought he was leaving. Now he's still typing.
No, there was a guy that named Salim that came in, and he would talk so much. So I was like, okay, that's cool. Got a new person that's really active and interested in talking. So we went with them a while. But then I started to be like, he seems kind of trolly to me. And he started saying things that were like objectively false. And he just got really annoying. And so eventually he did, and I don't remember what the deal was, but eventually I banned him. And ever since then, on an intermittent basis, he evades bans by creating new accounts and comes in to try and troll us.
Oh, I see.
Yeah.
Celine Dion. That's funny.
So there's certain things that I am always kind of like immediately suspicious of him, that it's him. Anyways, I guess the point is that we haven't programmed and done a study on the gaps, other than that I do recall doing a little thing looking at it and seeing that they liked to come back to those locations. So,
well, that would be the obvious thing to look for, right?
Yeah. So the problem is like, it seems to me like some signals do signify that like that's a good spot for a target, but then the question becomes, when do you actually take the trade? You gotta love a good troll. Yeah, I mean, but we mostly just ignore him, and once we realize that it's him, we ban him. It doesn't matter.
Doesn't matter. What doesn't matter?
Marco says it doesn't matter, but
he hasn't gone yet. He's still hanging around. He wants to hear you talk about him.
I guess the other thing that I would say is I don't look for gaps necessarily, but I am looking for a certain kind of action in the order flow that is likely to coincide with where those gaps are created. And I am analyzing the way that move played out, where it played out, and if there was any news to try and identify ones that are more likely to run. And the exacts of how I do that, I don't completely understand. And the parts I do understand, I don't necessarily want to share because that's the edge. But the point is I am looking for indications of informed trading. And if I have a reason to believe that the informed trading is something big, I will try and go with it. But today you're getting a lot of these moves that appear like they could be informed trading, but given the context, we kind of know that they're not. So for that last one was pretty good, yeah.
Anyway, we're getting a lot of blowback on talking about gaps, so we should move on.
Just like, HF says, affect the gaps and just look at the order flow. Well, the thing is not everybody wants to look at the DOM. And there are other ways to see it. So, like John doesn't watch the DOM really.
I don't at all.
Yeah, at all. But he still gets a lot of the same things from other indicators. Looks like bids are coming in. So you kind of got this area right here where there seems to be a lot of liquidity right here and not so much right here. So you kind of get in this thing. So they're kind of stuck around the open right now. Normally when they go through the open, there's a good chance that they just, go up. It looks to me like that they may have a day like yesterday where for, after the London close that they very, very slowly drift up, but I'm not going to be around for it. So. Now to troll you all, I should just make the title of the video be about gaps.
Oh, Lord.
Bots joins us to talk about gaps. There's going to be all these people that are going to come onto YouTube and try and find that section, and they'll be like, they're not talking about gaps. And then they'll see this part and they'll be like, oh, you a-hole. The 3900 is holding strong. Well, I don't know if they really, well, since they came through here, you're right that before they didn't they? Can't really see that stuff anymore, very much anymore. But when you come back down into here, you do see that there was some absorption on it and the liquidity did hold it. You're right. But the issue is if like this 38.99 is a liquidity hole, then we kind of run into an issue. Because the issue with a liquidity hole is that you can't really tell just from the order flow which way it's going to come out of it. That's kind of the whole point, is that the liquidity isn't there, so there's nothing to tell about it. Other than that there's not liquidity there.
Just whatever you do, don't mention the gaps.
Costco has announced that they're going to bring back free samples. Yay. When? So can I go there today and get free samples? How often do you back up NinjaTrader? Like never. So I do back up my programming bit on a regular basis, but the rest of it I don't care. And I frequently will just delete the whole cache folder because it seems like if it will get too big and that causes problems. So. Oh, yours just crashed and had to set it all again. Oh, do you have like, you mean like you had to rebuild your workspaces and stuff? So the workspaces themselves, though, get backed up automatically, right?
You can you can set Ninja up to do a backup for you.
Oh, really? Where do you do that from?
Yeah, every night or every other night or every Tuesday.
Is that under options? Where do you do that?
Oh,
Do you know where do you configure that at?
I'm just looking it up.
Oh, you're still looking it up.
Well, mine asks me every night if I want to do a backup.
Oh, really? Well, it'll always ask me if you want to save the workspace
No,
when I close
this
it.
is beyond that. It goes to backup.
Export backup file. Can't do it while you're connected. That one. I'll wait for him to find that, and then we got to get going.
Oh, sorry.
Okay, UTV News. A restaurant has gone viral for telling its customers that face diapers are not required to dine there.
It's gone viral. What?
For saying that telling its customers that face diapers are not required to dine there. Must be in Utah.
Face diapers. Nice term.
Jeez. Right?
Sorry, I'm searching the help functions for backup.
Oh, I got you. Well, they coming back down through the 94 area, and it's there's a little bit of liquidity, but I don't read anything too big from that. It's just kind of looks like more of this wishy-washy, slightly downish action.
Yeah, okay. So just open this in your help guide and you'll see.
Oh, okay.
Paste. There. I put it in the room.
Oh, in the YouTube? I see.
Mm-hmm.
Oh, you have to link it differently.
Oh,
You have
do?
to, yeah. So like
Just search backup. Search the word backup, and go to the first item that comes up.
Creating a backup archive.
Yeah, just go to the first one.
Tools, export backup file.
Scroll down a bit. There, see? Down further. Oh, too far.
Scheduling a backup.
Go higher, up higher. Right there.
I see.
See that image down at the bottom of that image? It says you can pick the day you want to do a backup. And one of those choices is every day.
So I would have to disconnect from my data, which I'm okay with doing right at the moment.
Well, what this does is as you do a shutdown,
Right.
that backup function will come in after it's disconnected you.
Come to tools, export backup file, and then you select what you want to back up, and then please remind me to back up my files every blah 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 blah.
Yeah.
Pretty cool. Useful. Out for lunch. Yeah, it's time for us to get going. Well, thank you for stopping in and saying hi, John.
Thanks for having me.
Well, and thank you
It's
guys
nice
all.
to get trolled every once in a while.
I know, right? Oh man. And I'm going to leave the trolley title here. And
We should code that up one of these days when we got nothing else to do.
the gap stuff.
Yeah.
Yeah, that's two things we should do. Yep. Well, send me the Ninja Trader 7 one, at least. And I guess if it's
really?
just based on... I guess if it's just based on the close isn't equal to the previous bar, or the open isn't open equal to the previous bar's close, could be enough, though.
Well, the biggest issue with when you did it with the pivots, the way they draw the lines and the way they draw the rectangles is completely different in 8 than it was in 7.
Yeah.
So
Well,
I don't know if the code's going to help you much, but I'll give it to you anyway.
it was just that one part is the qualification of what defines a gap is the part that I'm interested in.
Okay. Then I'll definitely send it over to you.
Okie dokie.
I'm looking
All
it up right now.
right. I will see you guys all tomorrow. This week went by quickly. Stay profitable, friends.